and I'm looking at the micro NASDAQ. And so I'm going to start out on the daily chart. And so when I look at the daily chart, what I'm simply going to be looking at are the highs and I'm going to look at the lows. And to make this completely easy, while I've automated all that instead of doing all the guesswork, I just found indicators that do it for me. So what I'm going to do for is do the DIY indicator. I'm going to select it. And then the next indicator that I also use is the Smart Money Concepts by Lux Algo. And those are the only constant indicators that I use every day. And so the default, it looks like this on a daily. And so what I do is go into the settings and I'm going to take everything off except two indicators. So I'm going to unselect all that because really only thing I'm needing is my levels. So the only thing I need is supply and demand. I don't need anything else. And sometimes I select EMA. If I use a 200 EMA and I unselect these two down here, and the only thing I'm going to leave is this one right here, the 200 EMA selected. And I'm going to hit OK. And that's what the chart looks like. It's going to give me supply, it's going to give me demand, and it's going to give me my 200 EMA. When price is below the 200 EMA, that means it's a seller's market. That sellers are in the market. I'm looking for sales. And when it's above the 200, like here, I'm looking for buy opportunities or rejections back from supply to the 200, like here. If I was looking for a sale on supply, I would go for a sale, stop loss above, and then take profit will be back here. This would actually be demand until it broke below. So that would be a demand zone, and that would be take profit back at the 200. Once it gets back to the 200, it has one or two options. It can either bounce off the 200 or it can break below the 200. Once it bounces below the 200, it's more than likely going to do one or two things. It's going to go below, retest, and go lower like it did, or it's just going to bounce and go directly straight back up. Like when it bounced off supply, bounce here and go back up. And the next indicator is smart money concepts. I'm going to go to, okay, so what I'm looking at right now, this is going to be, I'm going to go to this indicator. And so what I'm going to do here, I'm simply just going to go down to the very bottom and I'm going to select discount zones and I'm going to select all three of these. And that's all I need on this indicator. And this is pretty much is going to give me a range. And so now, as you can see, I have a range. It says premium, equal, and discount. So this is the top of the range, the middle of that range, and the bottom of the range. And so now it's simple for me to look at price. What I want to do is I can drop down to the 5, 15, or the 1 minute, and it's going to give me the same chart on a smaller level. So now if I drop down to a 1 minute chart, I'm currently seeing that we are below the bottom, the discount level, and the equal of the range. So we're on the lower half of the range. And so that's what I'm looking at. And we are currently below the 200 moving average. So anybody have any questions so far? Okay, so that's what I'm looking at right now. And so that's how I use my opportunities. That's how I find my opportunities in the market is always knowing where I'm at in the market at all times. Right now, I can clearly see that I'm at the lows at the bottom of the market. So right now, what I'm waiting on is seeing what price is going to get back down to this demand zone. What is price going to do when it reaches back here? Like I said earlier, when it gets to these zones, it's leaving you a 50-50 chance. Is it going to bounce off and go back up here? Or if it's going to break through, retest, and continue to go lower. Trade plan. A trade plan should be pretty simple. So don't make it complicated. It simply should be, what are you trading? I trade NQ or gold or whatever you trade. What days are you trading it? I'm trading it Mondays, Wednesdays, and Fridays. What times are you trading it? I'm trading it between an hour before market open and an hour after market open. And so just simply get you a how much am I risking every day going into the day? I'm going to the day risking $200, 300, 500, whatever it is. Know your risk. Every trade, know your risk. Every trade. If you're risking 50, $100 in a trade, what's my return? When am I going to get out? If you know these things before you get in the trade, it makes it a lot easier than going in without a plan, not knowing what you're risking, not knowing what you're doing, not knowing your strategy, hopping in and hopping out just because it's going in up and going down is not how you make money doing this. So here's what I'm looking at. We see we had that bounce here. I'm going to switch over to the 5 minute chart. We're still below the 200. And so I still will be looking for sale opportunities. And actually, see here, you could put your sell stop right below here. And the reason, because if you look at this structure here, and my stop loss would simply go here below these highs. And that's only because I'm looking for sale opportunities. I'm looking to see when can I get into a sell position. As I said, price is below the 200 EMA. The only time I would look for a buy is if price shows me I need to look for a buy. So say for instance, if price did this, we got here, bounced off this zone here. We broke up, retested 200 like we did, and then we come back down. This should break here to continue lower. We should break this structure to go a lower low. Now, if we don't break this structure and did this, bounced off, broke down, came up short here, and then did that, then that's not what I'm looking for because that's canceling out the plan that I had before. So learning how to read price, learning how to read market structure is pretty important because if you don't know what the market is doing, then you don't know what the market is doing. So here, price should break below 1850, 18,585 here. And if it breaks there, I will be looking for price to possibly go back down to here around 300, 18,300 to I say 18 even, 18,000 even. As you can see, looking at the 15-minute chart, price is currently trending down. Heikenaishi candles? No, these are regular candlesticks. Indicator that I have that I use sometimes is called Smooth Heikenaishi. This one, and it's an overlay, and so it looks like that, and it pretty much tell you when volume changes on levels. So here at the supply zone, you see it changed from green to red, showing that sellers were coming into the market. Yeah, don't overcomplicate this. It's extremely simple to do this stuff. You just have to put in the time. You have to know what you're doing. You have to develop a system, develop a plan, and know what you're doing. Stick with it. So you just don't you want to go in here lost without a plan, without a system, because it's not going to work out very good for you. And so now we're back here at the bottom of there. I will put my stop loss into profit because seeing now we're at the bottom of the range. What was that? You don't respect your plan? Oh, you trade market open? Yeah, why is that? You have to ask yourself, why are you developing a plan or system, and why are you not sticking to it? Because you got to think about it. If you're developing a plan, if you're coming up with a plan, it's for a reason. It's because you're finding something that you're seeing that you need to work on, you need to get better at, and it's something that you need to improve on. So you coming up with a plan is letting yourself know what those things are and what you need to do and fix them. And so why are you not sticking to it? If you're coming up with the plan, you got to ask yourself, why are you not sticking to it? Because you coming up with the plan, there's obviously was something that wasn't working before that made you come up with the plan. Because if everything was good, if you weren't having any issues, if you wanted to continue doing what you were doing, then you never would have developed a plan or thought about making a plan. You would have just kept doing what you were doing. So maybe you need to simplify your plan. Maybe you need to make it easier, simpler, something that is easier to stick to. But it seems like to me, everything that you're doing it the right way. You're scaling down. You are picking, one or two things to trade. And the only thing I would say to get better at is just make it simpler. If you're only gonna, if you're only gonna make one or two trades a day, three trades a day, however many, or you don't want to put right away a number of trades you want to take a day. So just put a dollar amount on it. So I'm only risking $300 today. And the one thing that makes it easier is having multiple accounts. So if you have one account and you're only risking the $300 on it and you hit that or you hit your target for that day, or whether it be $500, $600 a day, $100 a day, whatever it may be, you hit that on that account, you lock it up, close it out, then trade on another account. That way you're not stressing so much on each account. A lot of people, the issues they have with is over trading because they overtrade on one account. Oh yeah, 100%. That's a system that I started using late last year. Is with evaluations when I was doing prop firms. Is that I would do an evaluation, and then when I passed the evaluation, I wouldn't even trade my funded account. What I would do is I would get my funded account, and I said it, and I would start another evaluation. And so when I started another evaluation, what I would do is I would set my risk parameters on my funded account, and I would, like I said, shoot for $200-300 a day, whatever it is. I hit that, I lock it up, and I just go trade the evaluation. And so it makes it easier to hit those goals, stay to their rules if you have each rule set for each individual account. And so when you develop a plan or system, and it's easier to use that way because you can use it on all your accounts. And so if you're using a risk plan of, risking 300 with a profit target of 600 on each account, that's a lot easier to manage on multiple accounts than it would be if you have a problem with over trading on one single account. But it seems like to me everything that you're doing it the right way. You're scaling down. Trying to see if we're going to get a reaction off of this demand zone. It already rejected off of this box up here that it rejected off 1, 2, 3, 4 times. So these are signs. Like, look at what the market's telling you. Once again, that red box. If price wanted to keep going up, it would have kept going up. But when it got here again, it failed to go higher. It got here and it died out like it did before. And that's why I say watch your stop loss. Now here, I will simply put my stop loss above again. And I'm comfortable with that. I'm comfortable with that position. I'm comfortable with my stop loss. The direction where price could probably go to is probably headed back here. It's just keeping everything simple. So it looks like price is probably gonna, I'd say, at least head back down to 18,588. And so, like I said, this is a strong area of support here. Like I said, we have not broke below here yet. And so if we get a break on here, it's going to be a big move to the downside if it breaks through here. So this is probably going to be a big move if we get a break below 18,560. And then I'd be just simply looking for the break here, retest, and continue lower. So after, well, it breaks here, then I'll be looking for some type of structure to form. And then for it to come back and retest somewhere in this zone and then continue to go lower. Now I can move my stop loss into profit, making this a risk-free trade. And then whatever happens just happens at this point. So we're good either way. Let's check out what it's doing on the 15-minute. We have that rejection off that box. A big wick. If I'm looking left also, I'm seeing this here. This is also structure we had previous. I want to take my horizontal line, put it there, and that's also, so 5,355, right around that 200 EMA would be my take profit. So simply looking left, seeing where structure was, see what hit here, price hit there, went back down, then we had a break, and this could possibly retest that area. So that will be my take profit. But I'm going to get off here. Hope you have a good day. Trade safe, and I'll see you on the next one.